Which one will help you manage your money better between money market funds and CDs? Now, this depends on who you are. That's why I always tell people, know the person you are. Money is 80% behavior. I could say, yes, money market funds will give you better returns because they are giving you like 16%, and it is liquid and it's accessible and all those things. But are you able to invest consistently for a period of time and get that money and those returns that we're talking about? Because the thing with money market fund is it's accessible to you, right? So unless you go and tell them to lock it, or some of them do have their locking thing, then that it becomes more like a CD, right? But it's accessible to you. It means you have to be very disciplined. So if you're someone who is impulsive with spending and you therefore want to ensure that you are in a position whereby you cannot access your money, then you would rather go for CDs, because in that case you are not in a position to access that money, and therefore you are forced to wait until the maturity of that money for you to get your interest rates. So behavior comes in as a big part of this whole conversation. If you are disciplined enough, you can go with money market funds. The money is there. You will never just take it out to go and do something that you didn't plan to use it for, or impulsively just do something that you actually was not planning to do. But if you're not disciplined, which is okay, sometimes behavior takes time to nurture, then you just know that, okay, for me, if I put that money in a very accessible place, you know what, I'm going to use that money. Therefore, you know what, let me go with the very fixed rate in a fixed deposit account and use it to get my interest that is very certain. So behavior is a big part of this process as well, and deciding on which one you want to choose. Again, if you've never saved before and you feel like you won't really save if you have access to money, go to a CD, go to a fixed deposit account or a certificate of deposit, because that way you can't access that money and you're sure to get your money. And if you terminate it early enough, then of course you know the consequences of that as well. The other point that is really good with money market funds is compound interest. Remember, when you fix your money in a CD, the money is, if you fix 100,000 for 1 year, it's 100,000. You cannot add more money into that CD. You cannot add more money into that particular, I would say, contract. You can't add that money into that particular account. You have to maybe create a different one. But with money market fund, you are able to put in more money. So if you're a liquid person, if you're a business person, if you are a salaried person, therefore you want to be putting money constantly as you get more interest on your money, the best place in the money market fund. So for me, this is one of the biggest things as well, right? Compound, compound, compound. You want to compound your money as much as possible. You put in 10 today, you put in 20 tomorrow, you put in 30 tomorrow, despite how much money you have. And I like money market funds because they're flexible on the amount of money you might want to put in as well. So you will find that money market funds give you that facility to just compound your money over time. Therefore, if you look at the amount you'll have made, let's say in 2 years versus what you fixed, you end up making more money with money market funds. So I would rather whereby I can compound my money and add more, because I don't want to be put in a place whereby I have some cash, but because I already fixed some money, I can't do anything. So be in that position, be in that advantageous position whereby you can always add on to your money and compound it as time goes by. Compound interest. Then that follows, the next point is you can earn daily interest. Now with money market fund, if I put in 100,000 today and after 1 month I decide, you know what, I want to exit this position and put this money somewhere else or use it somewhere else, I will be given the interest I have earned for that period. Of course, it will be pro rata whereby you, if you were doing it on a, let's say 10% on annual basis, they are giving you 15%. They will just look at the percentages they've given over the period of time you've been with them, and then divide it by 365 and look at your interest on a daily basis and then give you your money. So there's no risk of you taking your money and saying, oh, I'll lose my interest. No, when you take your money out of the money market fund, you take it away with you with that particular money. Now with the CDs, that can't happen, right? Because you can't just terminate it. It's a fixed contract. So you can't just go there and terminate that whole process and take what you've earned so far. Most of the time you even end up losing more money because you're paying for the penalties. So in that case, money market funds again win in terms of earning daily, weekly, monthly, yearly interest and compounding as much as you can. Again, money market funds now has how many points, by the way? I think 7 or 10, I don't know. In terms of safety, a lot of people want to know how safe are these things? How safe are they? Now, most of the time, if you are someone who is risk averse, you want to stay with fixed deposit, because I know the bank. You know this cooperative bank, you know this is Barclays, you know this is, I don't know, cooperative, not cooperative, but Equity. So you know the banks that have been there for ages, you know the management, you understand them. They're safer because it's something that's been normalized to you. You use it every single day. Very few banks have, you know, actually collapsed. They do collapse. I don't think they're safe as such. They do collapse, but it's far in between, right? So with money market funds, these are investment firms that sometimes you're wondering who is controlling the investment firm, What are they doing? Are they regulated? All those things that you want to worry about. It's just like me or someone else coming up with a company and saying, hey guys, let me collect all your money, let me invest it for you and give you back some returns, right? So you do not understand how I manage the money, the risks I'm taking. You don't understand the firm. Maybe I'm just new into the market. Therefore, you have no history of what I've been doing. So in that case, if you are risk averse, then a money market fund would not be the best place for you. But remember, even the bank accounts sometimes fall and they sometimes, get liquidated and stuff like that. So just be careful. But when it comes to safety, both of them are quite safe, because remember, the principal amount you're investing is always safe. Safe with money market fund and safe with the CD. It doesn't matter, right? So both of them are safe in that sense. But if you're looking for like extra safety, extra buffer, and whereby let's say you have a lot of money that you actually don't want to risk it in any way, then you'd rather go to a fixed deposit account. But if you're someone who's trying to make more money and build wealth and compound wealth, then you still want to go to a money market fund. So it depends on your risk attitude and risk level. Now, the other thing, or this could be a disadvantage to money market funds, or even an advantage as well, is that they fluctuate in interest rates, right? Which I mentioned slightly. But the fluctuation could also mean that when the interest rates are going down, the person who fixed their money at, let's say, in a CD or in a fixed deposit account for, let's say, 15% is still at 15% for, like, let's say, 2 years. While at that period of time, the interest rates could be coming low and low, and therefore your money market fund could be earning you less and less and less and less. So in that case, again, inversely, you find that most of the time that fluctuation can be a double-edged sword. But it's very rare actually to see an environment whereby interest rates come down very fast and there's like a really big gap. Most of the time they actually go higher because of how the economy is developed, right? So in real sense, when it comes down like a point or two, it doesn't really get down that much. But of course, there's that risk that you never know what happens in the future. It can just come down, and therefore your fixed deposit account becomes a much better investment in that you have that constant rate, but you don't have that constant rate with a money market fund because it's following the economy and fluctuating every single day or week or whatever. So that's something that you could actually want to consider when you're getting into either of the investments. Finally, in terms of long-term returns, if you want a proper long-term return, I would suggest you go to a money market fund because they are better in terms of investment. They give you better long-term returns. You are free to always open a different one. It gives you a lot of flexibility. So overall, I would go with money market fund. But again, like I said, your first thing is the goal. What do you want? How much money do you have? What are you planning to do with it? That's why you always see someone to advise you. That's why we have financial advisors like myself, and therefore be in a position to give you that information that you might need despite everything else. Now remember, at the end of the day, that's diversification. You don't want to put all your money in money market fund. You don't want to put all your money in a CD if you like the CDs, for example. You want to diversify and make sure that your money is put in equally in places that you're comfortable with. So if you have you're in your life, between life and death, you have 1 million Kenya shillings, you don't want to put all of it in one money market fund. You don't want to put all of it in like a CD, right? You want to diversify depending on your goals and your risk attitude. So again, this is just an overall video. If you want some kind of consultation, some kind of coaching, reach out to me. My website is below. Anytime I'll be able to help you make that decision much clearer based on your circumstances. This is just an overall view. Otherwise, guys, let me know in the comment section below if this is helpful. Let me know which one you're going with and which one you feel more comfortable with. Okay, till next time, I'm out.